Okay, welcome guys. I think I'm live now, so I'm gonna share the link to all the communities. If you're just joining, you can share the link to your WhatsApp status and your communities. Right. Okay, just 1 minute before we start. Okay. Good evening, guys. So we were not able to go live yesterday because I was on a very important Twitter space. I was on a very important Twitter space, so we could not go live yesterday. It will not happen like that again, or if it happens, I'll let you all know. So today was quite boring. I've not seen any trade, no setup. I think I called two levels on the community, sorry, and the price reacted to one. Inducing traders, that was a very very nice inducement. It was not what I was looking at, so I just watch it do its thing. I was just there throughout all the chat. We're going to talk about that at the end of this video. So first, we want to look about what to expect for this week, right? That's what we want to be looking at. What to expect for this week. But first, I want to know if I can be heard, right? If I'm heard, I just want to hear or see one or two comments on the Telegram community. I don't want to join the live with my other phone because it will be echoing. So I want to see one or two comments right now. If I'm being heard very clearly, I want to see comments here on the Telegram community. I'm waiting. We've done so many lives before where the sound was a problem, and because nobody was able to communicate to me that they were not hearing anything, I just kept on riding like that. So I don't want that to be a mistake that will happen again. Okay, I think I'm not getting any replies back. I'll just join my other phone and see if I'm being heard. Okay, I just got a comment that I'm being heard. Alright, so we'll proceed. Do well to share the link. Do well to share the link to your WhatsApp community and WhatsApp status. Alright. So as our custom is, we mainly look at four instruments. That's the dollar index. We want to know what the dollar is doing because everything we're trading is inversely proportional to the dollar. Like everything we trade, everything we analyze, that's the Nasdaq and British pound and euros goes inverse with the dollar. So we want to know what the dollar is likely to do. Then we anticipate the opposite for the other pairs. That's what we do normally. Okay, so for the weekly um, time frame, this is dollars, and you see, I've been expecting price to take out this low for a very long time now. I think more than 3 weeks now. we have relative equal lows there, and I've been expecting price to take that out for a long time now. It doesn't mean what price is doing doesn't mean it's going to totally ignore that, right? It's okay. Like I keep saying, I've said this many times in I think one of my videos or in the Telegram community that it is indeed very possible, very possible for you to tell a level where price will react to, but it's like almost impossible. Let me say, not even almost, it's totally impossible for you to tell when price reacts to that level, except I'm being a prophet. Okay, if I want to start telling you when price will react to a level, I'm no more an analyst, I'm a prophet. Nobody can do that. All right, I will say I will tell you very well that price will react to this level, but I cannot tell you exactly when price will react to that level. So I'm still having my eyes on that level for dollars. That means I'm still expecting no downwards movement for dollars. But this retracement, where are we going to currently? On the weekly time frame, we have this drawn liquidity. First thing, when you're talking about, when you're looking at buyers, when you want to do your buyers, first you want to start. Some people start from the monthly time frame, right? But as an intraday trader, I like the weekly time frame. Starting my buyers, like my top down analysis from the weekly time frame. I like starting from there very much, right? So I want to see what is the PDR rate, that's the premium and discount array uh for the weekly time frame, or where is the nearest drawn liquidity and the farthest drawn liquidity, where is price likely to run into. That's what I want to be checking on the weekly and the daily time frame. So first, on the weekly time frame, we have this. Last week was bullish, and we have this drawn liquidity. That means you can write this down, note it down anywhere. I'm expecting dollar to price into this level. Mark my words. I'm expecting dollar to price into this level. But first, before you price there, that's our long-term buyers. Know that that's our long-term drawn liquidity. We want to find your short-term drawn liquidity. We go to the daily time frame, right? I'm gonna switch time frame now. Go to the daily time frame. Okay, there we go. Sorry, I'm trying to use the auto. All right. Okay, so that's the daily time frame. There you can see that level on the weekly time frame. See that level. There is imbalance there. There's an order block there. You can see this other block, this bullish green candle, is the other block there, and price is likely to price into that level. So that's valid, right? The daily time frame just confirmed that that level is valid. But first, before price goes to that level, what are we expecting first? That should be your question. What do you expect dollar to do first, right? So we have price breaking this high. I don't want to do too much of lines. So I'll be using my mouse, right? I'll be using my mouse so you can um know where my mouse is. I've been using the mouse highlighter for quite some time now. I don't know, but I thought the mouse highlighter was what's making my mouse hang. Now I'm not using the mouse highlighter and my mouse is still hanging. I don't know if it's because of the live or the network. I'm just confused. Well, we have that high. Price just broke that high. You can see if you look closely, that is a mitigation block, right? So we have this imbalance here, and this is just inverse of what Nasdaq, Euro USD, and DXY is doing. This is just inverse. So what am I expecting here? I'm expecting price to drop into this other block, the other block there. Why? Because we have a fair value gap there. So this could be a manipulation phase drawn liquidity. Price dropping into this fair value gap, repricing into that other block before coming for this weekly time frame. You can see the weekly time frame is the long term drawn liquidity, while the daily time frame is the short term drawn liquidity. So you want price to do exactly like you want price to do the short term drawn liquidity first. You want price to get to the short term drawn liquidity first before going to the long term drawn liquidity. That's how you mark out your buyers. Then you just want to go to the lower time frame for entries and using the weekly AMD, that's the accumulation, manipulation, and distribution, right? So I'm expecting dollar index to reprice into this fair value gap, trading into that other block before kicking higher for this level. And this might not be done within this week. It might take next week. This week might end up as a indecision candle. I don't know, right? That's not what I can tell, but what I can tell is these levels I'm pointing out to you are the levels I'm expecting price to trade into, right? So let's go to Euro USD now and see what Euro USD have been doing today. Normally I don't trade Euro USD, but for those of you that trade Euro USD today, you know what you were looking for: short or buys or sell. Short and long is for crypto, so most of you might not be familiar with that. Okay, so this Euro USD, I'm gonna go to the weekly time frame now. You can see the daily time frame is just inverse of what dollar was doing, right? So now we have this weekly time frame, very sweet. You just when looking at this chart, you should know exactly where our next draw liquidity is. It's very simple, but not easy, right? Very simple to spot out. We have this volume imbalance here for Euro USD. Volume imbalance, you can see there. That is our next drawn liquidity for the weekly time frame. That's our higher time frame or our long-term buyers, our long-term drawn liquidity. You want to see Euro USD trade into that level. This week might drop into that level, but we don't know. We don't know for sure if it's this week or next week. It might take 3 weeks, but I want to see price trading into that level. Remember what I said about the volume imbalance in, I think, I don't know the episode for sure, but the types of inefficiency, I talked about it, right? In types of inefficiency, I talked about it. Okay, so let's go to the daily time frame now. Okay, so that's Euro USD daily time frame. You can just look at that particular level on the weekly time frame. You can see that's inverse FVG there. You have inverse FVG there, where price is currently heading towards to now. So all these things are not just random. That's what I'm trying to point out here. All these things are not just random. They have exactly where price is reaching for. Price is either reaching for an old fair value gap that have either been priced into, or an inverse fair value gap, or a void, or a NWG, or a NDOG. All these things are not just random. If you can track these things, although you have lot of lines on your chart, but you should be able to track within the next 2 months. You should not look at further time, candles. You want to find the price action of within the previous 2 months. Sorry, not the next. Within the previous 2 months. That's where your bias and your analysis should be based on, right? Okay, so now you can see this is almost the same thing like the dollar, right? That's what Euro US is doing now. You have this drop, and for sure when you have a drop like this, you expect retracement. Is always right for you to anticipate retracement when you have a drop like this. For those of you that are trading the Euro USD, you can go and find your NWG. That's the new week opening gap. You can see this is the closing price on Friday, and this was the opening price on Sunday. So there's a gap there if you go to the lower time frame, but I'm not going to be doing that now because I don't trade Euro USD. For those of you that trade Euro USD, you can go and find that gap, and now you do you know how you trade with it for the week, right? So I'm expecting price to reach for, we have a small value gap there, and that's our other block. So if possible, I'm expecting price to trade into this fair value gap before coming down, right? Taking what? Taking Friday's high. Now price trade into this fair value gap, taking Friday's high before coming down. And if it takes Friday's high, it becomes what? The week zone liquidity. I thought about that on the channel. You can find it there on the channel. Week zone liquidity. If it takes out Friday high, like if it sweeps the week, it's showing you that the algorithm is ready to push further downwards to this weekly draw liquidity. Okay, so that's what I'm expecting for Euro USD. You can see Monday is an inside bar, and I think in one of my videos I talked about this inside bar, what's expected after an inside bar. Go and find that video. I think that was on weekly AMD. Yes, weekly AMD. So if at all you've forgotten about that, or you still have it on your notes, or you've not heard about it before, go and watch that video. You know what to expect after an inside bar occurs like this. Okay, so that's that for Euro US. That's what I'm expecting. I'm expecting price to trade into this short-term buy side liquidity before coming for this long-term buy side liquidity. the weekly AMD, manipulate to the upside, distribute to the downside. As simple as that, yet not easy. So let's go to GBP USD. Okay, we'll start from the weekly time frame here. GBP USD is already doing what is expected. This is what I wanted to talk. I was supposed to talk about yesterday, but it's already doing that, right? So on GBP USD, first you want to find your long-term draw liquidity. Like I said, these are my buyers. Simple like that. I want to find my long-term drawn liquidity and my short-term drawn liquidity. Long-term drawn liquidity using a weekly time frame. We still have volume imbalance here. We still have imbalances here for price to refill, right? But dollar is expected to price higher, so we want to be looking for the draw liquidity below. If dollar is supposed to price higher, GBP is dollar quote pairs. So if dollar is doing higher prices, it's not 100% accurate, but GBP is supposed to be doing lower prices. That's how it works, right? So we want to be checking for draw liquidity here on the weekly time frame, and the first I can see is this weekly volume imbalance. That is almost similar like Euro USD, and it's always nice to use Euro USD as correlations to trading GBP, and also using GBP USD as correlations to trading Euro USD. Okay, so we have that weekly drawn liquidity. You can see the rest of these zones are totally efficient, but are they really efficient? Let's check on the daily time frame. Okay, so we have those zones totally efficient. I don't know how you guys enjoy trading this particular pair, but I don't like this bunch of consolidations and all of this. But that's our only drawn liquidity we can see there, right? That's the only drawn liquidity you can see. That's our long-term drawn liquidity. It could take a month for price to get to here, but that's our long-term drawn liquidity. You know, when something is long-term, it could take a month or two. But that's where we want to see price. Like I said earlier, you cannot tell exactly when price will reach for a level, but you can tell exactly when, where price might react to. You will not be telling these levels every time correctly, but at least you can have some percentage win rate, like 60-70% of your buyers. Getting into trades are the hardest part. Trust me, bias is not hard at all. If you understand draw liquidity, or if you just understand liquidity, bias is not hard. Trust me, bias is not hard. What is hard is getting into these trades on the lower time frame. You know, you can get stopped out easily before price keep going in your direction. Before you know, you'll be stopped out, and that's where the consistency comes in, the discipline, the patience, the losses, the pain, everything. That's when you face them. That's when you battle. Most people are good with their bias, but execution is very poor, and that's where it takes experience to get into those trades, because you want to find behaviors that repeat, and finding those behaviors that repeat is by sticking to one particular pair. I don't care if you roast me for that, but that's what have helped me. You stick to one particular pair, you'll be able to track the behavior of that particular pair. You are trading 3-6 pairs, 4-10 pairs. Well, that's for you, but it will be very hard to meet up. Just see it like that. Okay, just see it like that. If trading is a school, right, you're supposed to be offering one course, and that one course should be one pair. You're offering multiple courses, then I think you you are actually delaying your progress. Like, you're supposed to get to that level, but because you're trying to learn different courses at a time, you're drawing yourself backwards. That's just how I see it. I might be wrong. I don't take my word for it. You can still do whatever works for you, right? So we have this daily time frame, draw liquidity. We have that fair value gap there for GBP USD, and we're expecting price to trade into here. That's what I was looking at when I was studying on Sunday. I was expecting GBP USD to trade into that, and you can see what Monday is already doing. Monday is already going for that. Market have not closed yet. Okay, market doesn't close on GBP USD. Sorry about that. So exactly, I think 5 o'clock. Okay, sorry, that is for Nasdaq. So for GBP USD tomorrow, I'm expecting price to price into that FVG before seeing some slight displacement downward. If we actually have high impact news, it will help speed all the price action and everything. High impact news will bring rush of volatility into the market, right? It doesn't really change much things. It just bring a lot of volatility, and those volatility can happen within 2 to 3 minutes. So if you are on the wrong side of the market, you get kicked out. It's not the news doing the wrong thing. Yeah, you want most. I get people giving me those gist that the news, like they got stopped out because of the news, they got this because of the news. It's not because of the news, it's because you were wrong. The chart is telling you exactly what you're supposed to do, but because you read price wrongly, that's why you got stopped out by news. You're not supposed to be trading the news. News is kind of is too impactful. Like within 2 to 3 minutes, you see those large, the price would have done at least 100 pips within 2 to 3 minutes. And you as a day trader, you are not using the weekly time frame for entries, you are not using the daily time frame for entries, you are using those 5 minutes, 1 minute, 3 minutes, 15-minute time frame for entries. You likely get stopped out because you were on the wrong side of the market, not because the news was doing the wrong thing. So don't always bring those gist up. I don't like it. Those don't always bring those gist up, right? I don't really like it. If you take a loss, you need to take responsibility of that loss and try to learn from your mistake. Don't just sit up and say, oh, because of news did that, news did that. You're actually going to learn exactly what made you got stopped out, right? So for GBP USD, for those that trade GBP USD, this is my view on GBP USD. I'm not saying this should change your own view, right? I'm not saying this should change your own view, but this is my view. I'm expecting Tuesday to price into that level, into that fair value gap, probably, and start dropping downwards, right? It's not a prediction, it's just the level I want to see price react. Price might trade into that fair value gap and keep going further. I am very okay to be wrong. I'll learn from it. So if, in case you're ready to criticize me, I think most people are doing that. They're waiting for the day I'll call out a level for in a live session like this, and price doesn't do exactly that, so they will criticize me. But I just thank God that they haven't come yet. Every level I keep calling every week, price just keep respecting those levels. Not that I'm the best, but just that I'm very good at bias. Getting into these trades, I cannot focus. I'm an intraday trader. Getting into Nasdaq, GBP, and Euro USD all at once. I just focus on Nasdaq, right? So this is my own view. You can try to correlate with what you see, or you can use my own view for your own analysis. Either way, that's my view. I want to see price trade into that fair value gap, then trades downward, right? So let's go to Nasdaq, the king. I love Nasdaq too much. I don't know why. Just the price action. Price action is so sweet. So let's go to Nasdaq. My network is slow. I hope I'm still here though, because I don't want what happened before happen again. Yeah, I kept on talking for about 14 minutes or so, and nobody heard me. My mic went off. I don't really want that again. Okay, you can see Nasdaq is this daily time frame Nasdaq. Let's go to the weekly time frame. It's very different from what GBP USD and Euro USD is doing right now, from the looks of it, right? So I think I've called out this level twice before. I want to see price trading to the rejection block of this weekly time frame. That's our rejection block there. Okay, so that's our rejection block. I want to see price trading to that, but this might not be this week, right? Since dollars is showing us upwards movement, so Euro USD could be doing exactly the opposite, like going downwards. But the only draw liquidity zone I'm seeing on Nasdaq here is this low. There is no fair value gap for price to trade into. Of course, this volume imbalance have been repriced already. So this is the only low I'm expecting for my long-term draw liquidity. This is the only low I'm seeing on Nasdaq for the weekly time frame. This low and that rejection block. This is not like I'm saying anywhere price trading to. Yeah, I'm looking at those two levels. Anywhere price reaches first, I know exactly what to do. I know exactly how to react to those levels. That's what I'm looking at on Nasdaq, right? So I'm expecting price for this low. You can see this is already a big zone liquidity. Like I've already referred the video to you already. In case you don't understand what I mean by big zone liquidity, let me draw it out and show you. So you see price, this candle currently sweeping with wicks the previous candle low. That's weak zone liquidity. And when price does this, it doesn't stop till it takes out a high. It doesn't stop till it takes out a high. So we've seen price taking out these highs, all of these highs, but I've still seen price heading for this rejection block. If it doesn't, then we can use Friday high as our weak zone liquidity. Let's go to the daily time frame. Using the weekly time frame to call Friday. Okay, so these are Friday high. You can use Friday high as a manipulation phase liquidity. Get my point. Now, why I'm expecting price to come back for Nasdaq is because we still have unfilled favorable gap here. This particular, if you see, this is kind of a pattern already. This is a behavior. This Nasdaq behavior already. There's nothing to tell me. That happened I've seen it for almost 6 months now. I've been following Nasdaq and I've seen it about, this is the third time I'm seeing it on Nasdaq. I can show you the recent one. This is the recent one. We have this favorable gap here. Price dropped there but did not refill it perfectly. Price came back for it. Let me see if I'll find another one. The previous one that happened. So this is how I mean by tracking behaviors. We track behaviors of all these, of one particular play. You understand exactly what it's doing. Now see this other one. This is a favorable gap. Right, we have this favorable gap. Price trades back into that favorable gap, but did not completely close it with the other block. What the price do? Come back for it before actually heading higher. So this is something that has been happening on Nasdaq, and it's kind of its thing now. It's behavior, so I'm used to it. I already know what to expect. If price is not closing up this FBD completely, then I will sure expect it to either reach out for a drawn liquidity, then come back for it. Come back to close this FBD. Sorry, this other one was already closed up on the other block there. This one is not closed up, so I can be expecting price to come back for this other block, and this low can be used as a manipulation phase liquidity. I don't know. Why? I'm just giving you two possible scenarios. Friday high can be used as a manipulation phase liquidity, or this low can be used as a manipulation phase liquidity for this week. For those of you that are following Nasdaq with me, right? Because I'm expecting price to come down for this low because of this unfilled favorable gap that was not priced into perfectly, right? Either ways, I still have a drawn liquidity, a long-term drawn liquidity that has the weekly rejection block. Now let's go to what I was expecting Nasdaq to do today. I think I dropped this on the, don't mind my markings, or I dropped this on the Telegram community. So if you're not on Telegram community, if you're not there already, check the description of this video, right? You see the link to the Telegram community. So this was what I was expecting on Nasdaq. Even though I drew this, I outlined this level, I outlined this buy side liquidity, I wasn't expecting price to react that much on this level, but it did. This is a very big inducement. Okay, let me point you to that favorable gap first. So this is 15-minute time frame. My chart is taking too long to load. Okay, you see we have this unfilled favorable gap from 2 weeks ago. Remember, 2 weeks ago, Friday. Price straight into that on Monday. Price used this internal liquidity as the manipulation phase drawn liquidity, which is not likely to, like, price doesn't do this normally. It doesn't use internal liquidity as the manipulation phase liquidity, but price did that last week. I was surprised though. That's why we did not have a straight distribution phase. We had this particular straight day on Wednesday. We have another day dropping into previous day FVG. You can see everything like this is just displaying here. It's just displaying itself. Everything. We have Tuesday opened here. Price dropped into previously drawn liquidity. Then price higher. What would you be expecting on the next day? Because it's a distribution phase, right? You'll be expecting price to do what? To drop into previously drawn liquidity, either one of these high and continue higher. But the fact that this week was not exactly the weekly EMD, it not show exactly the weekly cycle. That's the weekly cycle footprint. It used internal liquidity as the manipulation phase liquidity, which is not supposed to. That means Friday was going to be doing like completely opposite of what we were expecting. Friday, I'm not going to lie. I was expecting price to take out any of this sell side liquidity before pricing higher. But we have Friday come down, taking out um Thursday low, which is unlikely. This doesn't happen on the distribution phase normally. For those of you that have been following Nasdaq and have learned about the weekly AMD, you understand the weekly cycle very well. You know that this is unlikely. This doesn't happen like this every week. This is very very uncommon, right? Price took out Thursday low in the distribution phase. So that's telling me that this week we are likely to see price continue what Friday was doing, as coming downwards for this February gap. But first, this high, we have triple highs there, 1 2 3, even 4 self. Sweet buy side liquidity, very very sweet. So I understood that price will react to this 1 hour fair value gap there. That's the previous week drawn liquidity. Friday FVG. Remember what I said about Monday? Monday price action. Anytime price opens on Monday, price goes for two things. Just two things. Just write this current, as I'm saying it now, write it on your notes. Whenever price opens on Monday, you can use, let me say, two strategies to trade on Monday. The one thing is price goes for Friday high or Friday fair value gap. Monday is the continuation of what Friday was doing. You should understand that it's not a whole new week entirely with different price action. It's the same thing. Where last week stopped, that's where this week is going to continue. So exactly how you will trade, let's say this Friday was Thursday and today's Monday was Friday, and when let's assume today's Friday, right? When the day opens, you're expecting price to trade into previously drawn liquidity and continue downwards, right? But because market closed Saturday, Sunday, then opened on Monday, you're expecting price to do exactly the same thing it's supposed to do if it was in the same week. Price is going for the previously drawn liquidity, and the previously drawn liquidity could be Friday high or Friday fair value gap. That's what price does on Monday. If you are not sure of the Friday high or fair value gap, then you can use the new week opening gap. That's the NWG. In this case, this is not GBP USD, this is not Euro USD. For Nasdaq, in this case, this trade line. This is my new week opening gap. Why? Because the closing of Friday and the opening on Sunday was very close to each other. Like, I mean, and let me say, like a pip gap, just one pip gap. So I used one line to identify that level. It's not a gap, but it's the new week opening, right? I want to see how price reacts to that level. You can see price come straight into that level before bouncing off again. So all those people that took sell here on this fair value gap probably would have gotten stopped out if they did not take their profit, because this is not we are supposed to be looking for sell when we have buy side liquidity here. And price is currently doing what? Price is currently heading for that buy side liquidity. So price might do that before market closes. You know, market closes 1 hour before Asian session, right? So on Nasdaq, not on GBP USD or currency pairs. On Nasdaq, price closes 1 hour before Asian session. So after price closes Asian session, my have price trades into that buy side liquidity. Then on Tuesday, this for Tuesday I'll be expecting a sell. I might be wrong, and I'm not scared to be wrong. This is something most mentors, most educators, most tutors do. I'm not scared to be wrong. I'm telling you, I'm a human. I'm not a robot. I'm not I'm not this prophet, so I can be wrong with the chart. I'm not expecting. I'm not always expecting me to be calling these levels 100% perfect every single day, every single time. Okay, so that's just what I'm expecting, and this is not a financial advice. You should trade with what you understand. Trade with what you understand. I'm expecting. I had the community set the alert there. You can see my alert is there. You can see that red button there on the side. So my alert is already set there, and anytime the alert beep, I'm going to post it on the group. That's on the Telegram community. If you're not there, you can still join. So you know that yes, that alert have beeped, and you know what to be expecting after price takes out that buy side liquidity, because we have a drawn liquidity above and we have a drawn liquidity below. So this is going to be very confusing. You have this drawn liquidity below, this unfilled fair value gap. Sorry, what am I pointing at? This unfilled fair value gap and this weekly rejection block. So everything needs confirmation before you pick any action. Confirmation. It took me a very long time to settle with that fact. that I need to get confirmation first before taking any trade. Most times I'll just jump into trades and end up getting about 30 pip stop loss, 40 pip stop loss. But that's the thing. That's what losses does. Losses teaches you. You need to learn from your losses. When you learn one or two things from your losses, you find out that you will not, in a matter of months, you will not be doing those things anymore. And that's how you become wise. So you have to be happy because you won. That I get happy when anytime I win a trade. Anytime I lose a trade, I'm still happy because I'm 1% wiser than I was before. If I should show you I don't want to show you my statistical journal, but it's just here. You can see this button, this spreadsheet here. You can see the trading journal. You can see I don't want to click on it, but that's it, the trading journal records. So that's my spreadsheet, that's my statistical journal. Anything that happens, any loss I take, I'm recording it there. Any profit I take, I'm recording it there. And the reason I took that trade, if it resulted to a profit, I write the reason. If it resulted to a loss, I write the reason. These are I track my trades, right? I'm not doing this because I'm the best. I'm doing this because I have a goal I need to achieve. And if you have a goal, you need to do what is right also, not what feels good. What feels good is waking up every day looking for support and resistance to draw, looking for trend line to mark in about 40 charts or 40 pairs, or looking for that block or break of structure to mark, looking for supply and demand to mark. Then go about, take your trade. If you lost the trade, you blame news, or you blame manipulation, or you blame the broker, or whatever. You're not taking responsibility of your own losses. If you win the trade, you post it on your status or Twitter, you post you're the best trader and all of that. Yes, you're deceiving yourself, bro. I don't want to sound contradicting here, but you're deceiving yourself. Trust me, I used to do that before. It never helped me, right? So I don't want to be the preacher. Like I do see, the best lessons are the ones that you learn yourself, not the ones people tell you. Like if I end up preaching these things, saying these things that you need to do this, you need to do this, at the end of the day, you still go back and do what you were doing before. So I'm just telling you, in case it happens to you, then you remember, yes, Sammy said it, right? So that's going to be that for today. And thank you guys for joining. Thank you guys for joining. I really like the engagement. I really like the way the community is growing. I really appreciate all your efforts, and I promise to keep doing my best. So I don't know exactly when, but I'll be dropping the lecture this week. I think, let me give you a tip. The lecture will be ICT Fibonacci settings, right? Most of you have been asking how I find my 50%, my premium and discount, my equilibrium with my Fibonacci.